Welcome to the Stock Market Morning Prep video for Thursday, May 22nd. Dow Jones took it back from the previous day, up 158, Nasdaq up 34, S&P up 15, Russell up almost 6 points. And that's coming from an FOMC minutes talking about the economy, which really wasn't good news at all. So bad news is now good news again. Markets have no memory from day to day. We are at these extensions. We have the IWMs continually breaking down. Qs had a little bit of strength, but we rallied on yet again dismal volume. So how do you trade this market? How do you know what to do really from day to day? Well, if you're swing trading the market, it's going to be very difficult. And what I'd like to do is, I'm just going to show you real briefly before we get into the indices. You want to short stocks that have relative weakness. And you want to buy stocks that actually have sort of came down and basing well off its highs. You don't want to be buying stocks at these levels, at least the indices itself, because I do think that the analysis still states that we are in for a really big move. But the catalyst for the downside is really absent, right? There's no catalyst at all to push these markets lower. We do have a holiday reversal. Possibly still in check here for Thursday and tomorrow. Monday, the U.S. markets are closed for the Memorial Day holiday. So we have to be cautious here. Risk happens extremely fast, and when you have one of the majors, like the Russell, breaking down, Q's kind of picked up a little bit, but still, guys, there's really a big warning sign out there. I'm not showing indicators because they're all pointing, most of them are pointing lower. So we need to be cautious. But so what do we do? Well, I've got a bunch of emails. How do you trade this market? Well, give you an example like Western Digital. Really haven't gone too far to the downside, but stocks like that you can see clearly lower lows and lower highs. I like Western Digital on the short side. Stocks like SodaStream. Look at this. This chart looks horrendous. Starbucks. You take SBUX, and again, horrible. So when you have stocks like this that have showing relative weakness to what the market's doing, these are a little safer to go out and short the market, to be short. I wouldn't short the indices here other than the IWM, only because we really have no idea which way this market is headed, being at these extensions. Take a look at the long side if you want to trade on the long side, like Pandora. Stock that really have gotten cut in half and now kind of basing is more of a relative safe bet to start looking for some long trades if you want to stay long the trend. Okay, how about something like an FSLR, like a First Solar, breaking out now out of this bullish fallen wedge pattern, maybe as a retracement rally for Solar. You have Trina Solar, TSL, which is reported yesterday, some decent earnings. Now, obviously, you don't want to be chasing it up here, but on the next pullback, take a high to low Fibonacci retracement, back about maybe 50% of this, and look to buy something like that, or it maybe just in the group, like a JSL, JASL, something like that, that just caught that 200 and now is looking for another move higher. So there are opportunity. Yes, they are far and few because of the volatility, intraday volatility that I'm speaking about, not the VIX. We have swings that are just literally from minute to minute now. So that's going to end soon, and it's going to end quickly. So we need to know, are we going to break to the upside and test that 1916-ish area, or are we going to revert back to the downside and start to sell off? We don't know that, unfortunately. So we need to be nimble, and we need to reduce our exposure until the markets become easy again. And they will. It's just a matter of time. I'm neither a bull or a bear. I look at what technical analysis tells me, and then I apply that to my trading, and that's really what it comes down to. I'd like to see the market correct. Again, we haven't had a 10% correction in 700 and I believe now 18 days. That's a long time without a correction. With stocks highly elevated at all-time highs, fairly valued, you have to really be careful, especially when you have leaders starting to break down. So just a little insight before we go into the indices. So now let's move on and take a look at what we have here. We had Bank of Japan really talking down their yen. We had a big pop up yesterday early in the session and then it reverted back to the downside. And now it looks like this area, this Fibonacci cluster along with that 200 day, it's going to need a little backing and filling to really break to the upside. But if that does happen, if it does break to the upside, you will see continued pressure in equities. Okay, so let's keep an eye on that Japanese yen. The more meaningful chart is the bonds. You know, you have a 30-year bond here. We have that inverted head and shoulders that I've been showing you here for weeks now, and really panning out. And as you can see, we broke that slanted neckline, and we just literally been breaking out, flagging, breaking out, and now we're flagging again. So when markets are rallying, bonds aren't really doing too much. When the markets would rally, bonds would really sell off. That's not the case anymore. I think bonds are headed into a big short squeeze, at least for the short term. The longer term picture, yeah, bonds still look bearish and for now, but things could change. So you have to really watch this because this here is what really gets me nervous for any upside movement in equities. And you have this target of the 1272 extension, and of course the bigger target coincides perfectly with the head and shoulders, the inverted head and shoulders upside target of the 1618 retracement. And I think that we can literally get up there. So yes, I would be looking to buy pullbacks in TLT. Or again, the bonds itself, if you play the future. But I do like this, and this to me is a huge warning sign for equities until things subside. All right, now let's go into the indices. You see the ES, we're just above the 1272 extension. But again, if we break out, it would not surprise me that the markets would go to 1916, 1918. But if if the ES does decide to move to the upside on very low volume, that is going to be the cue to look to start entering short the market on any breach below the previous day's low when it gets up to that area. Okay, obviously we still need a trigger. All right, Dow Jones. We had a bear flag. We failed miserably. 2 days down, big. 2 days up, small. 1 day down, and then back up again. So markets have no memory from day to day. Again, below average volume. Took back the whole previous candle. But again, you can't deny the fact that the bears did not break this market lower. So until that happens, you have to use caution. I would not be looking to short the indices other than the IWM, but I would be looking to short relative weakness as far as equities are concerned. All right, transports, again, holding up really well. We do have this bearish rising wedge now, but it's only bearish when we break the lower trend line on a closing basis. But look at the volume, dismal volume. So to me, I'm suspect of this rally. Not that I'm not taking any long trades if they are able to come my way, but right now you have to use caution here. Okay. Now let's take a look at IWMs. Another chart here. This really terrible looking chart. You can see bearish configuration of the moving averages, all pointing lower, below the 200, below the 200 EMA, SMA, trend line lower, and we've reached this uptrend, both of the uptrend lines. So not really good. This is not what you want to see. So something like this, I would definitely be continuing looking to short the IWM if you are an indice player. Now the Q is a little different. We did have that bear flag. We broke out of it. Actually, well, we didn't break out of it, but we didn't break down. And again, be well below average, but I still wouldn't just go out and look to short the Qs at the moment. So let's see what happens in the coming days. Again, I still think that we might have that holiday reversal in play, but let's take it one step at a time here until the markets can realign itself. Right now, we have a dangerous market, so I wouldn't want to be too long or too short equities at the moment until things start to realign itself, meaning that we see the weakness in the transports, weakness in the ES, and of course weakness in the Dow Jones, where everything else is now pointing lower, and then we will look to short the market. However, if we have other indices all moving up now, and the last is going to be the Russell, and the Russell decides to revert back to the upside, then you can look to start buying rallies and hold stocks for maybe a day or two. But I still would be cautious of any limited upside movement. Again, we're really close to that. 1916, you're only about 20-something handles away right now in the ES, so that could be really achieved in any given day. But when that does happen, I do think sellers will come back in an aggressive way. But again, let's take it one step at a time. All right, have a great day, and we'll have another big update tomorrow. And if you are not around tomorrow, have a great long holiday weekend.